to a grocery store recently, you already know the story. The basic cost of keeping food on the table has climbed to painful new highs. And the moment you try filling your tank, you feel the secondary hit. Energy prices act as a silent, universal tax on anyone who works for a living, draining your paycheck before you even get it home. But if you turn on the news, you hear a completely different narrative. You're told the stock market is booming, tech companies are reporting massive earnings, and the broader economy is thriving. Behind the scenes, though, a massive contradiction is quietly playing out. The wealthiest investors, elite hedge funds, and central banks are deliberately pulling their money out of those modern assets. Instead, these institutions are accumulating physical gold at a staggering pace, hoarding volumes of the metal we haven't seen in decades. Historically, when the smartest money in the world makes a synchronized, highly secretive pivot of this size, it serves as a leading indicator of an impending shift in the global economy. The public is being fed a steady diet of optimistic stock headlines, while billionaires are silently bracing for an impact the rest of us can't see yet. Large-scale investors are increasingly focused on the threat of a persistent, aggressive cycle of inflation. This chart shows the exponential growth of global paper currency over recent decades. Because central banks can create trillions virtually overnight, every new dollar printed mechanically dilutes the dollars you already hold, causing your actual purchasing power to drop off a cliff. Gold operates under an entirely different set of physical laws. It possesses absolute scarcity. No central bank or politician can print a gold bar into existence to cover a deficit. That hard, physical limit on supply renders gold mathematically immune to the constant debasement that destroys government-issued currencies over time. Whenever global confidence begins to slip, when investors suspect governments can no longer responsibly manage their own paper money, massive amounts of capital naturally flee towards the safety of finite assets. These investors are leveraging gold's mathematical scarcity as a shield, ensuring their existing wealth doesn't evaporate along with the value of paper currency. Beyond the immediate threat of inflation, institutional capital is also watching an unsustainable wall of global government debt. With interest rates remaining elevated, the cost to simply service that staggering national debt is compounding exponentially. It turns the very foundation of the modern global economy into an incredibly fragile structure. At the same time, high-level analysts are looking at a stock market that continues to break records, concluding that equities have become dangerously overvalued and entirely disconnected from this grim economic reality. This creates a unique tipping point. When the abstract digital numbers on our screens stop making logical sense, human psychology takes over. Investors instinctively look for an anchor. There is a raw, instinctual comfort in owning a tangible asset. When digital balances feel like a mirage, people crave something heavy, something they can actually hold in their hands. And historically, nothing competes with gold's track record. It is the sole asset class that has consistently survived total systemic financial collapses, massive recessions, and global wars for thousands of years. Gold's power is psychological. It represents the ultimate historical failsafe, activated only when trust in modern financial engineering completely breaks down. Right now, the financial world is standing at a deeply divided crossroads. Experts look at this massive wave of gold accumulation and fiercely debate what it actually means for our immediate future. The optimistic perspective suggests this is just a temporary overreaction, a brief buying spree driven by short-term geopolitical tensions and temporary market jitters that will eventually smooth out. The pessimistic perspective views this trend as a reliable barometer of panic. They see it as the very leading edge of a major, imminent unraveling across global markets. But regardless of which camp is right, history provides one harsh truth. The ultra-wealthy rarely panic in public. They do not announce their protective strategies on cable news. They quietly reposition their capital behind closed doors. The consequence of that institutional secrecy is brutal. By the time ordinary people realize a financial crisis has actually arrived, the protective assets have already been consolidated by the elite and priced entirely out of reach. So it leaves us with one critical question to answer. Are the world's billionaires simply being paranoid, or are they quietly bracing for a catastrophic financial storm the rest of the world is entirely blind to?